Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, as the new year gets underway, let's take the opportunity to analyse the trends on the local index. Violetta Todorova from Leverage Shares gives us her perspective on the ASX 200.
Although the index lost momentum over the past couple of months, and the relative strength index indicator, which measured the internal strength of the index, has deteriorated, I still am quite positive for 2026. We need a little bit of work to be done before we can lift our upside targets, and I think in the next month or so we can see this kind of consolidation and drifting lower. But the key levels for investors to watch is support at 8,383 points, which is our key. As long as that level holds, we are expecting to see some gradual recovery in the next couple of months. But if we do see this level being broken on the downside, that will mean for investors that the pullback from the October highs is likely to be slightly deeper. However, that wouldn't change the bullish case. Eventually, I believe the index will recover, and the first upside price target would be a retest of the October high of 9,115 points.
Well, the energy sector has come into sharp focus following the US military intervention in Venezuela, with the country estimated to have 17% of the world's oil reserves. Gary Glover from Novus Capital says he expects some good trading opportunities in the sector. Here's his analysis of the largest locally listed energy stock, Woodside.
You have seen rotation through there as well. Obviously, we've seen lithium be pretty robust there. We've seen, the sort of coal prices being firm here and uranium there, but you are still seeing a bit of rotation throughout the sectors. But I think anytime you see those sectors, have a bit of weakness, so you just got to be careful to chase those. You're seeing with sort of uranium and coal stocks, they do tend to fire up and then pull back quite sharply. So I think it's a sector to be, to all eyes on for 26. I don't think this energy story is going to go away. I think, there's clear demand there, in the years ahead here. So I think it's a real sector to be keeping an eye on there. But we can kind of see there with Woodside there, we've broken that sort of downtrend. We've had that impulsive rally out of the low. We've now sort of got a couple of higher lows in place there. We've sort of held at sort of key support here. We're kind of building quite nicely in that sort of top half of this last sort of rally here. So just got some really constructive signs with that sort of oil and gas sector, which would probably be in one of the weaker areas of the energy complex.
Well, the AI trade remains alive and well, and for local traders, data centres have been the way to play this. Gary Glover notes that data centre related stocks have had some large corrections recently.
Just starting to see some of those stocks emerge here. So HMC is actually just sort of coming, creating a bit of a base there. It's been a really uptick in volume there, so signs of accumulation taking place. And we're just starting to get a few higher lows in place. We're above the 50-day moving average. We're now breaking through some old highs there. So there's some positive signs there that some of these data center stocks can push through. And look, there's a bit of conjecture around data centers. Obviously, there's a big outlay. They take a while to make money. But the return on equity, I think once they're in place there, is going to be pretty high. It's just waiting for them to, there is a lag in terms of profitability for these stocks here. So it's definitely a sector to keep an eye on here, because if that, most people have the thesis there that return on equity is around 30% for some of these data center operators. So if that is the case, we do get to that point, then you can probably see a recovery in some of these data center stocks. And we have seen overseas some corporate activity in that sector as well. So everyone, the AI companies starting to secure the data centers so they can kind of secure their future here as well. So that does put that sector in play there. So that Macquarie Technology Group is the other one that looks pretty interesting as well. That sort of got a similar sort of tightening sort of setup there. Volumes have increased here and the price action has tightened up. Just looks like it has made sort of one or two sort of higher lows here. So that's another one there which sort of is sort of showing a little bit of strength there in the current market and just starting to sort of break out to the top side. So just, yeah, a little bit happening in that that data center space, which it has been sort of weak here the last year.
Well, that's it for this week's edition of The Charts to Watch. Join us for more technical talk next week. Happy trading.